Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because although I know it's tempting to try and predict the Bitcoin cycle top over and over again, I believe it's way more efficient to follow the trend until it ends. And this is why, as long as Bitcoin continues closing weekly candles above its 20-week moving average like it just did last week, my base case has to remain that Bitcoin still has higher to rally this year and that the final push scenario is the most likely based on current data. Seasonality also agrees with this. I've seen so many investors that were bullish at the beginning of October throw in the towel because of the rough start we've had, but I've seen Bitcoin turn things around so many times, and I wouldn't rule out October and November quite yet, especially because my favorite macro indicator, the global liquidity index, is pointing to an end of year rally as well, and this just measures liquidity conditions by looking at all the major central bank balance sheets as well as all the major money supplies, and it has served us so well this entire cycle, so I don't see why this time would be any different, and I would rather continue to use it until the market tells me otherwise. And for those reasons, my base case remains unchanged, but if we do end up getting that weekly close below the 20-week moving average, I'll have to adjust my views to the full reset scenario, where we're going to keep our eyes on the 50-week, which is Bitcoin's macro line in the sand during bull markets. And if we do end up seeing a close below that level, like what we saw in 2022, that would be a major warning sign that something is wrong and that we have to readjust our views. But as long as Bitcoin is above the 50-week and below the 20-week, I'll be expecting the full reset scenario where Bitcoin rallies higher later in the cycle and the cycle extends. And there are some good arguments for the full reset scenario as well. I mean, if an almost $20 billion leverage liquidation event isn't a full reset, I don't know what is. And this is why Monday's free weekly report was called the biggest liquidation event ever, because I do expect this to have lasting impacts on the market, and it might take the market some time to recover after such an insane event. We may already be seeing early signs of these lasting changes because this week we saw the CME futures open interest flipping Binance, and this is pretty crazy because the CME is a regulated US-based exchange, and Binance is usually the most popular crypto exchange by far. But perhaps so many traders and investors were shaken up and fed up with what happened that they moved over to the CME, and you can see on all major pairs, whether you look at Bitcoin, Ethereum, Solana, or XRP, CME now has higher open interest than Binance, and it wouldn't surprise me if this was the trend going forward. Another strong argument for a prolonged consolidation period and full reset scenario is the lower highs and lower lows we're seeing on the fear and greed index, similar to what we saw in 2024 when Bitcoin went sideways for almost 9 months, and we've been going sideways for a very long time recently, and it just consolidated as well as saw that sentiment downtrend until eventually we had a breakout. And so far what we're seeing right now looks very similar to that time period, and you see it in the ETF inflows that have been resetting a bit as well. No major inflows, no major outflows, just sideways in terms of inflows over the past few days since that liquidation event. And those reasons are why I have the full reset scenario as my second most likely outcome after my base case, and why I have the cycle being over as the least likely. But notice how it says unlikely and not impossible, like some perma bulls will have you believe, because there are some concerning signs as well. We have this rising wedge pattern for Bitcoin. They tend to break down more often than they break upwards, so that is a bit of a risk. And you have it combined with a bearish divergence where Bitcoin is making new highs, but its relative strength is dropping on each consecutive high. That's usually a major warning sign, and it's a decent reason to be concerned. Same thing with the 4-year cycle in terms of days since the bottom. This bull market has been about 152 weeks, which is the exact same length as the previous two. So we can't act like the cycle being over is impossible and the bears don't have any strong arguments. I just believe the other two outcomes are more likely. And we have two very obvious invalidation levels that we can use to manage our risk as the market gives us more data. So how am I positioning for the remainder of the year, and what changes did I make to my portfolio this week? I did deploy some cash into Bitcoin, Ethereum, and Solana on Monday morning, like I wrote about in the free weekly report. And now I didn't buy on Monday because I believe the bottom had to be in or that price was going to skyrocket immediately. I just bought because my system called for it after last week's drop. And although I didn't get to buy the exact bottom this time, I know that sticking to a system will help me succeed in the long term, even if I don't get perfect entries and exits at all times. And the reason why I didn't throw my entire cash position back into the market on that dip is because we are deep into the cycle and I want to be increasing my cash allocation as prices get higher and higher and risk increases. And as always, if you'd like to learn more about my portfolio automation system or mental models I use to navigate this market or common mistakes I see so many investors making, you can check out the Crypto Enjoyers program and community in the video description. I'm very close to completing the final module for the common mistakes course. My goal is to release it tomorrow. And once that final module is complete, the program and community will be moving from a one-time fee to a subscription. But for now, I'm not that concerned about a bear market because Bitcoin is about 50% away from its 200-week moving average. And by the time we actually reach it, it might be higher because it is a moving target. And a 40% correction for here is nothing in terms of Bitcoin standards. Last bull market, we actually saw a 54% correction and still put in new highs. And that's why, although so many people whine and complain about diminishing returns, what they forget is that it works in both directions. So the same way Bitcoin can't put in the same multiples as it used to, I also expect the bear markets to be more shallow. And it's always great when the on-chain data agrees with our TA. This is the Bitcoin net unrealized profit and loss. It gauges Bitcoin risk by looking at how much unrealized gains Bitcoin investors are sitting on, the same way our Bitcoin 200-week moving average chart gauges risk by seeing how extended Bitcoin is from its 200-week moving average, because the more extended it is from that 4-year average, the more mean reversion risk there is, and the more profits investors are likely sitting on and will likely start locking in because of how extended it is from its mean. So it's no surprise that this chart puts Bitcoin between expensive and fair value, and so does the net unrealized profit and loss. But for now, Bitcoin is still in the same trading range until we get a close below 112K or above 123K. I expect more chop, but the future continues to look so bright for this asset class. We wouldn't have believed these headlines just a few years ago. We have Congress working on a crypto bill when just a few years ago, crypto was essentially illegal in the US. We have access to cryptocurrencies coming to 401ks in the near future, and we have the largest asset manager in the world with over $13 trillion in assets under management raving about tokenization and this new wave of opportunity. And we have the largest bank in the world planning to offer crypto trading for their clients as well. So short term, there's going to be chop, there's going to be corrections, there's going to be shakeouts, there's going to be bear markets, but it's pretty hard to bet against the longer term trend here. And speaking of longer term trend, things continue to look bleak for MicroStrategy. It continues to bleed lower and they're buying less and less Bitcoin because it's becoming harder and harder to raise new debt or issue new shares as that premium continues to compress. And it looks even worse for just about every other treasury company that copied MicroStrategy and doesn't have as much brand awareness. And we saw 48 new Bitcoin treasuries pop up in just the past 3 months. So it's no surprise that that is beginning to cool off. Is it great for the long term? Of course, but it did seem to get a bit overheated in the short term. And these are starting to look a lot more like Bitcoin ETFs than these magic infinite money glitches that can just keep issuing new debt forever and buying more and more Bitcoin forever. That doesn't seem to be the case. As for Ethereum, still looking incredibly strong here. Even though it traded as low as 3,500 last week, it was still able to close around 4,100 and maintain another weekly close above its range high at 4,000. And this continues to look like a very clear bull flag to me, and I do expect Ethereum to enter price discovery this year. We're still seeing Ethereum corporate treasuries like Bitmine buying a ton of Ethereum and taking it off the market, buying 200,000 Ethereum just this week. And we're seeing some decent ETF inflows as well. And although I don't think Ethereum can go to 10K this year like Tom Lee and Arthur Hayes are calling for, I do expect price discovery before year end. Ethereum Bitcoin is also looking more and more like a bull flag here. It's no surprise that the biggest rejection came at this major pivot level that goes all the way back to 2018. Ethereum Bitcoin had a huge capitulation, bottomed the exact same place it bottomed in 2019. Very quick recovery back up to the major pivot. Now it's consolidating, and I do expect a breakthrough before year end. And a strong Ethereum is great news for altcoins because there are two main requirements for alt season and they haven't happened yet this cycle. One, you need Ethereum to enter price discovery, and two, you need the Russell 2000 to enter price discovery as well. The Russell 2000 is essentially the altcoin index for stocks. It's an index of 2,000 small to medium-sized companies that are considered much riskier than the 500 large caps in the S&P 500. The same way altcoins are considered much riskier than Bitcoin. And the lack of alt season hasn't been just a crypto specific thing. We haven't seen any type of major rally or performance from the Russell 2000, the small cap index, even though the S&P 500 made new highs over a year ago. And now the Russell 2000 did just break out this week, and we just want to see some continuation so that altcoins can follow through, and we should see Ethereum follow in the Russell 2000's footsteps quite soon, as long as the Russell 2000 maintains this breakout. As for Solana, not a great look closing below its range high at $200, but it is holding its major moving averages, so we want to see a quick reclaim of that level. Investors are definitely waiting for these spot ETFs to be approved, and today is supposed to be the deadline, but it could still get delayed thanks to the US government shutdown entering its third week. But the good news is it should be ending soon. Only 3 shutdowns have gone longer than what we've currently seen, so hopefully it gets resolved soon. And we really want to see Solana Bitcoin put in a higher low here and reclaim that range low that it fell back below if we're going to see Solana outperform Ethereum and Bitcoin going into the end of the year. And speaking of going into the end of the year, as we mentioned earlier, the global liquidity index is pointing to a rally until late November. We just need the dollar index to roll over if we're going to see this cycle extend and continue. The market is pricing in an additional rate cut over the next 12 months. It went from 4 to 5, but these rate cut expectations are going to continue to change between now and then. This is what the market's current projection looks like. We know the labor market is weakening. You can see it in the unemployment rate, continuing jobless claims, and initial jobless claims. And we know inflation is remaining stubborn at elevated levels, but not elevated enough to stop the Fed from cutting rates. And we know GDP is still positive, and there are still no major signs of us being in a recession as of right now. And we know it's only a matter of time before the Fed stops quantitative tightening and goes back to quantitative easing. So it's no surprise that we're in the midst of a global liquidity index macro breakout, and we're seeing that carry over into the S&P 500, which should provide a strong tailwind for Bitcoin. And we see it even more clearly in the insane price action we continue to see from gold. And I believe it's only a matter of time before Bitcoin rallies for the exact same reasons that gold is. And this is because more and more investors are catching on to the fact that the federal government is running huge deficits. That trend seems to be worsening year after year. Exponential debt growth means exponential money supply growth because that debt has to be monetized. And when that debt does get monetized, it results in currency debasement, and the devaluing of that fiat currency is a strong tailwind for our risk assets like the S&P 500 and our fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.